All right, hey, good afternoon, everyone. It is 2:20, and let's take a review on what happened this week in the markets. Lots of volatility, absolutely crazy. But let's just jump into it, okay? So Monday, Tuesday, Wednesday, Thursday, Friday. This is your chart of November's soybeans. We started the week just with under selling pressure, right? We gapped lower Sunday night, and we just kept the pressure on all day. We thought we had a reversal coming on Tuesday and into Wednesday, and the market just killed it on Wednesday. And if you remember, what happened Wednesday was just kind of a overall market sell-off, right? Stocks were down, every commodity was down, everything was just down on Wednesday. And then yesterday and today, we kind of fought our way back through. Really looked like this morning soybeans were really going to get going. But you know, let's try to keep things simple. Lots of volatility still coming. Yield issues are still up in the air. We don't know where we're at. Really unusual activity in the energy market and the bean oil market. So we'll have to stay tuned to that. You know, if there's a bullish story, it's about yield and demand, right? Lower yield, higher demand because of biofuels or because of issues raging in the food supply in Argentina and China. So if we go higher from here, that's what's going to be driving it. This is a bullish wave count. So let's just kind of walk through what's bullish and what's bearish here. This is a bullish wave count because you've got 1, 2, 3, 4, 5 waves up in one. Now you have this move down in 2, which could be 3 waves. Okay, so this is a more bullish than bearish wave count. We also have this dotted line right here, which is being drawn off of this big up day right here. If you remember, this is oh no, sorry, that's not the report day. This is the report day. So where we got the acreage shock. So what the market is doing here is consolidating right at this level, trying to decide whether sellers need to push it lower. We're at a critical juncture here, in our opinion. Anything below this low, which would be 1325, or you know, you can be a little bit more generous and say 1320, 1318, somewhere in that range. But in this area right in here, below that, we want to be sold. We're below our hedge line. We're below stuff. It just doesn't make any sense not to be sold and protected on the way down if we break lower. On the other hand, if we start to nip up above today's high and all these opens, closes, and opens here, then you have to be long. This is just too powerful of a potential count not to be. And so what this setup is calling for is a big move whichever direction it goes out of, and no one can predict which way it's going to go. So you got to stay on your toes, and you got to be ready to sell this sucker and move, and don't be afraid or shy to own it if it starts to peek its head up and go a little bit higher, because this is a bullish count. And remember, if we look at our weekly chart, let me go to the weekly chart of November beans. Come on, chart, let's do this. So if we look at this one, remember, this is what we're looking at. Longer term, and this starts from the low in 2020, of April of 2020, you have 5 waves up in one, you have an A, a B, and a C. You have 5 waves of C right here. So you've got a completed 2-wave that this just looks beautiful, and now we're up in a 1 and we're up in a 2 on the daily chart, right? This is how the daily chart counts at 1, 2. So on soybeans you have a 1, 2, 1, 2, which would be which would be a really powerful count, and would be something that you would see if our yield is surprisingly low, or if our demand is surprisingly high, or if there's some sort of event that creates more demand than what the market's thinking of. Then you would see that would be the recipe that would provide the catalyst to go higher. If this falls apart and this is the top and we're on our way down, then what would be the catalyst for that? Well, the exact opposite. Hey, our demand is junk, plenty of beans everywhere else, and we have a yield that beats the USDA's target, and we come in and shock the market with like a 52.5 or 53. That would provide the catalyst for beans to work lower. We just don't know yet, so we need to be patient, and I think the best course of action for sure is to pay attention to this area right in here, where we're sandwiched between some pretty nice chart support and nothing but nothing but abyss below it. So short below, long above, keep it simple, and let's stick to it and get in the right position with the market. Okay, now corn. Corn had a big nasty week. Let me show you the daily chart first, right? It did the same thing beans did. Here's Monday, Tuesday, Wednesday, Thursday, Friday. Started the day off Sunday night, just gapped lower, kept going, tried to reverse on Wednesday, and then, by 3, 4 in the morning on Wednesday, out of news, on the news out of Russia, wheat and corn were really rocketing higher. It looked like we're going to come close these gaps and fully reverse this thing. And then they just pounded both wheat and corn, and we came lower. And we did close below $5, which is bad. So let's just walk through the bad and the good, right? Big gap that we ran away from and failed to close, that's bad. We don't like that at all. That is either a breakaway or a measuring gap. So we don't like those. Big upper shadow, bearish engulfing, fully engulfing, almost 2 days worth of action here with follow through. That's bad. We don't like that at all. And we also don't really like the idea that we've closed below the psychological idea of $5 and are putting pressure on this on these lower areas here. We don't like that at all either. So what do we like? Well, we like that we've held these areas. We like that we just haven't ripped it lower, and we like that we have a little bit of a hook reversal here today. So we held yesterday's low, tied it, and then we reversed it. We did close positive, and that's actually a little bit of a buy signal. So on the positive side, you've got a wave 2 position, and you've got this little hook reversal here. So corn could find some strength here, especially if beans do, and work themselves higher. And let's take a look at the weekly chart so you can see in a little bit bigger level kind of what corn is doing. So remember a few weeks ago we put these squares on here because what this did is this started from this wave here from the low, and it measured time, and then I just replicated it and took it out. Because what we're looking for is waves of equal duration, and you can see that next week is the final week where these two waves will be equal. So this big long sideways action here, is this the beginning of a new motive wave down, or is this all corrective? Well, you can count 3 waves down in this one. I don't think you can count 5. You can count 3 waves up. I don't think you can count 5. Then you can count 3 waves back down, and it's really hard to count 5. So now here you have a 1 up and a 2 down, and this 2 is hanging out right at the 61.8 retracement of the big advance that we had from 2020 up through early 22. And I think that's significant because, like we talked before, this little wave 2 here retraced 38.2 of this. So you have alternation that usually occurs in a market where the length of wave 2 and length of wave 4, or the depth of correction, will be opposite. If one goes 38.2, the other goes 61.8, and vice versa. In here we have a deep correction in a wave 4 position, and over here we had a 38.2. Now I want to jump back to beans here with that in mind, because this is actually holding the 38.2 retracement. Let me get my numbers up here. And you can see right here we're holding the 38.2 retracement level, which is another reason why if we break it, we want to sell it, because then you've got to move back to the 50% or 61.8 coming. And so as long as this holds, hey, we're happy, we want to go above it. But if it doesn't, then we want to get out below it. So same thing here with corn, right? What we like about corn's action is that it didn't break it. It held it. It's been unable to close below the 61.8 at 490. It just can't quite get the strength to do that yet. And our bias is that it won't. You know, we just see too many bullish things happening in the energy complex, and too many, or not too many, enough bullishness coming from the supply side of things that it may not warrant a move downward. Maybe a better way to say it is we don't have the bearishness to really push it through. Maybe the supply side's not as bullish as maybe people hoped up here, but it's probably not bearish enough to push us lower. So so we're looking for this to hold, and then up we go. If we look at the daily chart, let's pull up the daily chart here. right? We're just looking for this level to hold, and if it fails and it starts headed lower, then you probably need to be hedged because we're probably going to go make new lows. But even those lows, we just don't think the fundamentals warrant it being much lower for very long. So we're going to be really, really patient. We're going to take our time, and we're going to let the market kind of find its way. This extreme volatility won't last forever. It won't last much longer. And if it does, then logic would tell you that the next most probable thing is a move higher, especially if beans start to work. Okay, now last but certainly not least, let's talk about our friend Kansas City wheat. And there's really very little that you can say about Kansas City wheat other than it was just a shit show all the way around. So I mean, we opened the week lower and we just continued to pummel it every day. Every rally got sold. And the only thing that you can say that was positive about this is that 120 came and the market closed. And maybe if you're lucky, you can look at this chart and you can start to see some divergence. So this is your 240-minute chart, and here is stochastics. Here's your oscillators. We do have divergence across the oscillators in the MACD, and we have a 13 here on the 240-minute chart, but you can see 1, 2, 3 13s in a row, right? So eventually these will result in a rally, but from what level is anybody's guess. We could come in Sunday night and this thing can get rocking and rolling, or we may need to just grind a little bit lower, continue to hammer on these divergences before we go higher. So just wheat is just a really, really difficult beast to trade. What's interesting is that this decline is happening in the middle of overwhelmingly bullish fundamental developments coming out of pretty much everywhere else in the world. So, and just big picture, we continue to deal with less wheat supply and more wheat demand that's difficult to difficult to get sourced. So why our futures markets are in a free fall when global markets are soaring higher is a mystery, and that's a spread that will more than likely revert to its mean and come back together at some point, which means that we're probably closer to done here than not. And I think we've said that for several days, but I think we got to stick with that because there's no reason to jump in and be a seller at this point. We don't think, and that's our opinion. So one of the things that we're looking for in wheat, we're talking about different strategies. Let me go back to the daily chart and take this stuff off so it's a little cleaner. One of the things we're looking at doing is selling some 740 or 720 puts and buying $8 calls with it. With the premium that you collect, that gives you a window of where the trade can be successful. Sell 1 or 2 puts down here into this deep oversold condition and buy a call against it to open up that upside. Seems to be a prudent risk to take down in here, because if you break this lower boundary line and break this low, then you've got to either exit your short puts or you've got to sell futures in order to hedge it. Certainly not risk-free, but it's probably a little bit safer than trying to just catch a falling knife with futures as this thing just imploded this week. So with that, that's a tradable idea for you. It's not necessarily a firm recommendation, but if you've sold your wheat crop and you're looking for re-ownership, that is a viable strategy for you to use against the December contract. The options are very, very expensive, which is why in this kind of a down move, being a seller of options is prudent, and owning some calls is prudent as well. As long as you understand that downside risk and take action if this level here gets violated, then that trade should end up okay. But it's definitely not risk-free, and it definitely does require some management and some insight to it. Okay, that's what I've got for you. We will be paying very close attention Sunday night. Excited to see how it trades Monday, Tuesday, Wednesday. Hopefully we found a floor here and up we come. But there's always risk trading these markets. So if you're going to trade them, do so in light of your own financial condition. And we will talk to you next week. Have a great night. See ya.